The only complicated thing in your income tax is your residential status. So this will be your format to prepare incidence of tax. Received rupees 1000 in India which accrued in England. Received in India, accrued in England. Taxable, taxable, taxable. Hello everyone, I am your ALsir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. So now we are in the easiest part of your income tax. As I told you, the only complicated thing in your income tax is your residential status. Residential status, it is not complicated unless you learn the conditions, basic as well as additional conditions. Now, in income tax 1, your session number 5, what we are going to do? We'll go for agenda. So what will be your today's agenda? The first one will be incidence of tax, and the second part will be problems on that. So we'll do simple 2 problems on incidence of tax. I'll not give you complete concept now. For those 2 problems, which are the concept required, those things only we will discuss in today's session. I'm not giving you complete format. I am giving you almost 70% of your format. So this will be your format to prepare incidence of tax. In this, the first thing will be particular, resident, not ordinary resident, and non-resident. You already understood who is resident, who is not ordinarily resident, as well as who is non-resident. Under this, whatever income we receive, if I am a resident, whether it is a taxable, yes or no. If whatever income I have received, if I am not ordinarily resident, whether it is a taxable or not. Then the last thing, whatever income we received, if I am non-resident, whether it is taxable or not. Those things we have to find out. Easiest thing, learn 2 to 3 concepts, then your incidence of tax is done. Now, whatever things received in India, always taxable in all 3 cases. Even though he is resident, even though he is not ordinarily resident, even though he is non-resident. If anything which is received in India, it is always taxable for all. As I told you, if Chris Gayle come to India, he wins man of the match in the IPL, and whatever award or cash gift he receives, he has to pay tax. Why? Because it is received in India. Even though he is non-resident, he has to pay tax in India itself. So, you may think that, sir, when Chris Gayle will come and pay tax, when he will go to income tax office? No. If he want 1 lakh means the Indian government will not give him 1 lakh. Indian government will give him, if it is 1 lakh cash price, they will minus 35,000. They will give him only 65,000. Why only 65? Why? Because 35,000 they will deduct as tax. So, after deducting tax, they will give him the final value. That's why we call it as TDS, tax deducted at source. Now, if anything which is received in India, for all the 3, it is taxable. Now, second one, earned in India. So, first one received in India and the second one earned in India. Now, very simple, taxable, taxable, taxable. For all the 3 cases, we call it as taxable. Now, third one, received and earned outside India, but controlled in India. So what does it mean? Very simple. Your income also outside India. Whatever you have earned, that is also outside India. But controlled by whom? Indians. All the business which is controlled in India. Your head office in India. So it is very simple. Taxable, taxable, non-taxable. Remember, received in India, all three taxable. Earned in India, all three taxable. Received and earned both outside but controlled in India. That is, only two persons are taxable. If he is a non-resident, he is not taxable. Now, so what is this taxable and all? We'll do one problem, you will understand better. Now, the next one. If there is anything like agricultural income or dividend from Indian company. Remember, if there is anything like agricultural income in India, for example, you have a land in India, then for everybody it is exempted. Agricultural income always exempted. Then, if you have received any dividend from Indian company, it is always exempted. Clear? Any dividend received from Indian company, it is always exempted. Remember this. Now, these things you have to remember. Along with this, one more. Fifth point. Past untaxed income. So it is also exempted. The old one, untaxed income, we don't consider as taxable for these three cases. So before we go to problem, remember 5 things. Anything which is received in India, taxable, 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 all 3. Earned in India, taxable, taxable, taxable. Received and earned outside, but it is controlled from India, taxable, taxable, non-taxable. Remember, anything like agriculture or dividend income, Indian company or land is in India. Remember, any agriculture income in India or any dividend received from Indian company, we call it as exemption. So agricultural income is exempted. Any dividend received also exempted. Then the last one, past untaxed income. Past untaxed income, remember, it is always exempted for all the 3 cases. So these are the major 5. Another 2 to 3 points are there. Those things I'll explain you while doing in the next session. Now, so these things, please take a screenshot or write down. We'll go for the problems. Now, we'll move to your problem now. So this will be your problem number 1. Problem number 1 will come later. First we'll solve problem 2. Then we'll come back to problem number 1. This will be your question. Received rupees 1000 in India, which accrued in England. So forget about accrued in England. What is the concept? Received in India. Received in India means what? I'll go back to your format. Received in India, taxable, taxable, taxable. Simple. So for all the 3 cases, taxable, taxable and taxable. Hope you understood now. Second one. Rupees 2000 earned in India but received in England. Again go back to concept. Earned in India. Even though it is received in England or some other country, but earned where? In India. So I'll go back to your question. Earned in India means, remember, taxable, taxable and taxable. Earned in India. So these are the points you need to remember. Hope you are getting now how to implement those format. Now, So next one, rupees 10,000 and rupees 8,000 were earned and received in Africa but bought in India. Next one, rupees 8,000 was earned and received in Japan and this amount was bought to India. Now, as per this, in the both the cases, the first person will be taxable because received also outside, earned also outside. That's why only the first person, like resident, is always taxable. Now, so rupees 6,000 was untaxed foreign income. So what we should do? Exempted. Untaxed foreign income always exempted. And brought to India previous year. Next. So which of the above income are taxable in the name of Mohan? We'll go to answer. Simple. Received in India, accrued in England. Taxable, taxable, taxable. This will be your answer. Now, earned in India but received in England. Taxable, taxable, taxable. Why? Because it is earned in India. Next, earned and received in Africa but brought to India. Now, taxable, not taxable, not taxable. Hope you understood. Next one, earned and received in Japan from a business. So, same thing, taxable, not taxable, not taxable because earned also outside and which is received also outside. Now, untaxed past income, not taxable, not taxable, not taxable. If it is untaxed past foreign income, always not taxable. I'll give you best example for that. Your parents are, your father is in abroad. He come to India in the current year. Whatever income heard in the previous year, whatever he can bring to India. So whatever amount he bought from foreign, it is not taxable in India. Remember, whatever income he bought from abroad is not taxable in India. So this is a very important one. So this is your answer. In your examination, this is compulsory question. So how many marks you will get? For this question, you will get 10 marks. So here we have only 5 adjustments. Hardly you will get 6 or 7 adjustments. Now we'll go back to your problem number 1. Sri Ramesh has the following income for the financial year 2019 and 2020. In this, income from house property situated in London. Now, so we'll go back to answer directly. Income from salary received in India. Received in India, remember this. Next, profit from business in London, controlled from India. Remember. Next, profit from Kanpur business. Remember this. Agriculture income also. Remember, agriculture income is what? Exempted. Anything which is received or earned in India, no need to read further. It is always taxable. So this will be our answer. Income from house property. In this we have only 2. Resident, non-resident. We'll check this. Income from house property. Taxable, not taxable. Because it is situated where? London. Income from salary received in India. Simple thing. Taxable, taxable. Received in India, earned in India. Don't see further. For every column, you keep filling amount. Next. Profit from business in London, controlled from India. First person taxable, second person not taxable. Profit from Kanpur business, taxable, taxable. Where is Kanpur? It is in India. So where you earned? Within India. So it is taxable for both the cases. Agriculture income in India, it is exempt, exempt. Now, so in the previous problem, we have not filled amount. Why? Because you should understand how to fill. So whether it is a taxable or not. But in your examination, you have to do your answer like this. One more column will be added. like resident, ordinary, not ordinarily resident. So these two are only basic problems to understand. In the next session, we will go for your examination problems. Now, as per this taxable income, what is the total? It will be 2,30,000, 2,50,000 and 2,98,000. If you add these two, you will get 1,38,000. This is all about your today's session. I'll go back to one by one slide. If you want, you can take screenshots. So this will be your agenda for the session. So there is a format. So I have not given you complete format. I have given part of the format. In the next session, I'll complete this format. So this is your problem number 1. So in the problem, they have asked only two things, resident in India or non-resident. So this is computation of taxable income, the answer. This is your problem number 2 and this is a solution for the problem. So hope you understood what you have to do. Your homework is very simple. The same thing, don't see the answer, see only questions. Prepare columns. Just mention taxable, 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 exempt, 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 exempt. Those things you have to work out at home so that you will understand better. So there is a compulsory, as I told you, 10-mark problem. So don't miss this. Easily you can score 10 marks. Thank you.